Wall Street ended lower on Friday, weighed down by tech stocks after a stronger than expected jobs report torpedoed recent optimism that the Federal Reserve might ease up on its aggressive campaign against high inflation. The Dow closed with a near 0.25% gain, while the S&P 500 ended down fractionally and the tech-heavy Nasdaq fell 0.5%. Data on Friday showed U.S. employers hired far more workers than expected in July, taking the air out of investors' hopes that the Fed might let up on its interest rate hikes. Christian Ledoux is Director of Investments at Cap Trust.
Well, it's a pretty mild reaction to today's job report, which was, I think, a lot higher than most people were expecting. But I think the reality is that's a lagging indicator that reflected a period before a lot of layoff announcements had been made. And I think when we see the next month's data, we're going to see the drop in employment, or maybe not a negative number, but a much lower ad that will be more reflective of what's happening in the real world.
Bank shares rose as the odds increased for another 75 basis point interest rate hike in September. Shares of rate-sensitive tech companies like Facebook owner Meta Platforms and Amazon fell Friday, pulling down the S&P 500. But a more than 6.5% decline in shares of Tesla weighed more heavily on the index. Bucking the trend for tech shares was Twitter, which gained more than 3.5%, and finally shares of Lyft surged more than 16.5% after the ride-hailing firm forecast an adjusted operating profit of $1 billion for the year 2024 after posting record quarterly earnings.